So in this session, we're going to be covering the second step of our six-step process. And in this step, we're going to be pinpointing and drawing in the key reference areas. This is what will allow us to read the market better and will give us key support and resistance levels for which to trade off of. So let's just jump right into the charts and pick up where we left off. Okay, we're back to a daily chart showing about 1 year of action in the S&P 500. All right. So in this daily chart, what are the major support or resistance areas, the major key reference areas that would be in play right now as we are trading here on this current day moving into the following day? All right. Well, quickly we see, for instance, that there's major buying tail here that was major support, but this is 150 points away. This is several months of action. So for today, this isn't even relevant. So you don't have to sit there and analyze all these major ones. You got to see, okay, what's happening around here. All right. And just by looking at this chart, one of the laws of market behavior, again, that we had discussed before, is the simple one that previous market behavior affects current one, which gives rise to the principle that previous resistance, once broken, now becomes support. Well, what was previous resistance here? Quite simply, it was this area right here, right? This area the market had gone up here, rejected it, tried to break out, rejected it, tried again, rejected it, once again rejected it. So we had, these range extremes here in this area, all right? And then where it ended up, taking a pretty big intermediate downtrend from there. And once we came back here and tested it, we moved sideways a lot. We had a hard time breaking right through. Okay, so we kind of went back and forth, a struggle between the bulls and the bears in this area right here, until finally this big bar came up and just shot right through it, and we went higher. All right, so now we're coming back down to test this general area right here that had provided resistance before. All right, and we are testing it. So that's the first large, let's say, key reference area. And if we zoom in a bit here, all right, so we'll notice that, this these general previous highs from about a high of 1398.25, and here the high was 1406.25. So it was about a 7 or 8 point area, all right, that we have now in the recent days tested over and over. Let's go into a 5-minute chart to see. Okay, here we are on a 5-minute chart, and we see that the low here was 1397.5, so just right around that 98.25 area. And we had said it was the whole area was stretched to 06, so you see like all these lows hit, bounced, hit, bounced, hit, bounced. We're all within this general major daily support area, and that's why we were getting these bounces and this sideways movement. We were holding here, all right? The long-term buyers were quote-unquote defending this area, buying here now after we had broken out above it, all right? And we've discussed all the various reasons why there would be buying here in all the earlier trading. So go back to that and just reacquaint yourself with those ideas as you move forward. But now the question is that the only reason we're holding at this area? Is there another reason that we could tell from the bigger picture that is a major key reference area? Well, let's take a look at that. Okay, here we are back to a daily. And what do you notice here? What do you notice on the daily chart? Do you notice something that could be a good support or resistance level, could be a good key reference area? You should be able to, based on all we had gone through before. All right, so if you want, pause this video, take a look at it, study it, and think about what that would be, other than this major, previous resistance. What else would be right now? Okay, so I hope you've thought about it, because that's how you're going to learn the best. But really, what should draw your attention is this area right here, where we see a lot of sideways movement that actually coincides with the previous resistance levels. Okay, so this area right here. And so let's zoom into that and see what this area actually was. Let's go down to about a 15-minute chart. Okay, here we are on that time frame, and I've drawn in this profile that represents that sideways area. Okay, so this is, literally about 3 full weeks of generally sideways movement. Even though, we were going up here and then down, but in general, there was a lot of kind of sideways volume building in this area. And we see this major high volume node that built over this area. And if you look closer at this major high volume node, you'll see that the top of it is around 1407, 1408. The bottom of it is around 1390. So because it was such a bigger time frame, it's a pretty wide area. But let's notice that the middle part, or i.e. the high volume node within this general area, is around 1397 or so. Okay, so from the top of it to the thickest, most middle part, basically coincides with that previous major key reference area that we had drawn in at around 1398 to 1406. This is basically 1397 to 1407. So generally same area. All right. Now, that's very important to know because as we'll see, what we're going to care about when it comes to trading the key reference areas is what's called confluence. Now, confluence means when two or more major key reference areas overlap or end up happening at the same place. What this does is that it compounds probabilities. What we want is a compounding of probabilities. The more things coincide, the more key reference areas coincide in the same place, the higher the probabilities of getting reactions from there and from significant things in the market happening there. Okay? And so we want to see these things aligning. And in this case, it does. That major previous resistance, this major high volume node coincide within around the same area. Okay? So let's go draw that in. Okay, back at the 5-minute chart, now we've drawn in the other one, 1397, coinciding with the exact part of the high volume node, and then the top of it, which was 1407. So you see they're overlapping, and now we can see why this is causing the market to hold and balance around this area, despite it just breaking down so sharply. All right. Now, is there another thing that could coincide potentially with this? Well, let's see. Okay, back here once again to the daily, right? And so we've seen that this is one reference area. This high volume node represented by this was another one. But what is potentially yet another one? Well, we know that one of the other key reference areas is what? The launching point of high directional conviction. Can you see in this chart around where we are looking a launching point of high directional conviction? Let me move in a step closer here. Where is the launching point of high directional conviction in our area of interest? Well, it's obviously right here. You see this big, strong bar that finally broke above here decisively, that broke out of this 3-week or so balance area very decisively. That was a major launching point of directional conviction by the big players, and it ended up sustaining a move higher and a building of value at a completely higher level. So the bottom of this, the place where it started launching, is yet another key reference area. All right, so let's look at where that actually took place on the smaller charts. Okay, we've zoomed in here, and we notice that this was the big high volume node, the many days of going sideways, and here was a major breakout out of it. This was the day that was showing up as one big bar, but we'll notice that even though it was showing up as one big bar on the daily chart, what actually happened when you zoom in was that it actually gapped up and then took off from there. Okay, so the place that really launched this big directional conviction was right here, right? the place where the market actually gapped right up. This is where it started. And then it kept accelerating up through there. So what is this level right here? Well, it's right around 1397. That was the close here, and that's where the market gapped out of. Okay, and what's 1397? Back to this chart, we see it coincides yet again with the previous two things. So now we have this major confluence. We have that major previous resistance, we have the major high volume node area, and now we have the launching point of directional conviction. They're all happening in the same place. What does that tell us? That tells us that this is a great support area. Very important to watch what happens here. All right. Even though it's on such a bigger time frame, we had to look at the daily chart. Do you see how it influences what you do as a day trader? If you weren't looking at that, right? And your context is this. Let's zoom out a bit more here. Right? Your context is this major drop, then a gap down, another drop. It looks so bearish, and yet here it is holding day after day after day here. It tries to break down, it can't. It tries to break down, it can't. You know, if you didn't know why this area was really important, you might have been trying to get in aggressively short on these days and losing in the process. But knowing it was such an important key reference area told you that the high likelihood was the market could easily balance here, right? And so this really plays out in the day trading time frame. And as of now, as of this point, as we head into Monday, it's still playing out. We've still held here, so it's still an important area, right? It hasn't been invalidated yet. All right, and we'll see how this is going to play out as we go along with this analysis. Okay, so now that we've established this as such an important area, let's actually put in these lines and kind of make them permanent as we go into the next day. Okay, so I have actually now drawn in right on the chart, just using one of the simple tools that the charting software gives you. I've drawn in this major area, 1397, 1398, 25, 1406, 1407, and the whole area in between it, right? So this is the general major support zone, the major confluence of three separate key reference areas, okay? And it's going to continue to be important as long as we stay around here and don't break through it to the downside and start building value lower. Now, what other big picture key reference areas are important, right? So I had shown before that this was one major, like month-long sideways bounce. Moved up here, rejected, back down, tried to test it, rejected, tested this area again, rejected, back up, so on. So it was a major sideways area. So let's draw in a profile here and see what we can glean out of this. Okay, we noticed that the major high volume node, even though there was a lot of volume in a lot of different areas obviously, but the major one happened right here. Okay, so we could say that this general area here to here is also an important area to be watching on the upside. Of course, right now we're nowhere really near that. That's about 50 points higher in the market. Extremely unlikely that we would make a move that much in one day given the current volatility environment, but it doesn't hurt to put it there just in case, to be aware of these things. Okay, of course what also coincides here is this launching point right here of this drop that took us out of this balance area, so this becomes also important, right? So we have the high volume node and the breakdown launching point. So this whole area is important, and we can draw in resistance at this whole level on the bigger picture, right? So let's just go ahead and do that. Okay, so this is pretty wide, again, because this is a bigger picture. Once you are trading it that particular day, you're going to find smaller ones to focus on, but this is just to know that once you're in this zone, it's an important resistance zone. Just like here, this is pretty wide, but we knew that we were in an important support zone. Okay, so once we get up there, we'll know we're in an important resistance zone. Now, what's something closer to that that's also from the bigger picture perspective that'll be important to keep focusing on? Well, let's get rid of this profile to see that more clearly. Well, we had learned that the extremes of ranges are important, and once they're broken, they act as important key reference areas. So what's an extreme of a range here that was broken and now could act as an important reference area? Well, obviously it was the bottom of this balance area. So we had this important low here that took it up, then we kind of tested it here, then we came here, then here. So this general area on the low side is now important once we test it to the upside. Okay, and we can zoom in on the last couple instances of it to just kind of have a narrower area that's important. So let's do that. All right, I've zoomed in here, and we see that important resistance will be the bottom of this up to around also these bottoms, right, for the last two major instances of it. Well, we notice that this has actually already been in play once. Look at here. Let's zoom in here. Let's go to a 5-minute session to check this out. You see, this is the zone, and on day 3, so this is the first day after we dropped out here, we held here, we held this general area, we opened up with a gap up, we touched the exact zone to the tick and just sold off all the way down all day. Okay, so we already know that it's actually providing good resistance, but it hasn't been broken yet, so it's still there. It's still very important. This was the first test of it, and we still have this whole general area. It's about a 4-point area of resistance here, right? A key reference area. So this is good to keep in context. You look at it on the bigger level, this is what it looks like. Okay, so we have this big support zone, we have this resistance zone. And all this comprises basically the big picture key reference areas, all right? And we've drawn them all in. Now, what about the shorter term ones? We are day trading, right? And we need to find out what's going to be important for the next day. Now, this can easily be in play the next day. The bottom part of this, can easily still be in play. But what other things are we going to have to take a look at to develop a trade plan as we go into this following day on Monday? Well, let's see. Okay, well, the first thing that jumps out at me is this major gap. All right, this gap that, technically speaking, if we just zoom out again here for a sec, technically speaking, before this drop down, we were still within this large balance area. So we hadn't actually broken down, Let me go to a daily chart real quick and show you. Okay, here we are at a daily chart. If you notice that, so we were in this big uptrend, uptrend, we finally broke out of this area right here. It's highlighted in green. We went up and then we started kind of going sideways, okay? But before this big drop down, okay, and this, you can't see the gap when you're looking at a daily chart because each day is a whole bar, but this was where the gap started from and just took it down. But before this, okay, let's scroll it out a little. You'll see that before that gap down, we were still in this balance area. So it's looking very bullish, right? We're still in an uptrend. We had just broken out and now we're just moving sideways. So it's extremely bullish. But after this, now, the picture is not as bullish anymore. Of course, the big picture is still bullish, but at least on the 60 and 15-minute time frames, we noticed that as we broke down out of here, that was short-term bearish. Okay, and what caused that? What caused that was this gap down that you saw in the daily chart as one big down bar. So to me, this is a very important area because this was a launching point of directional conviction to the downside that broke us out of this major key reference area that had the bottom right here. So this was very important, and it'll surely provide good resistance on the test up. So let's draw that in. Okay, now we have it drawn in. That's the close of the gap, and it also even, there's more confluence because it coincides with this, where hit it once, rejected it, hit it again, rejected it, and couldn't get through it. So it's even more powerful because of the confluence, the compounding probabilities of these previous highs that were rejected there too. Okay, so that's an important area to watch. That's only 25 points away, so if a big move up starts from here, we could reach that level, and that would likely be a good selling point. Where else do we have to look now for important key reference area going forward in the next day? Well, even though we have this as a key reference area in itself, these several days provided us with some information. Okay, it wasn't just this to the tick. Right here we rejected down. Right here we rejected down. Here, here. We left tails in this whole general area of these last 3 days. So to me, even before we hit here, we're still going to find resistance at the top of the range of this current balance area. Okay? So it becomes more like this. We're going to hit an initial resistance first at the top of this current sideways range, which is here. Like you hit it once, twice, and this is the third time where we ejected it down. And then we hit a second bigger one as we go into here. Okay? So this is important to note. Now let's go even a step further. As you'll notice, what we've been doing is going from the biggest picture key reference areas down and down and down to the smaller ones, right? Okay, well, where are some smaller ones? Let's zoom in a bit into this chart. Okay, here we are. And one thing we know is that when you're currently going to trade this following day, the previous day's high and low, the extremes, the tails, are going to be important for the most immediate action, right? So where are those key reference areas? Well, we have, this is the high of the previous day, which also happened to be a bit of a selling tail that coincided with also the down move from the morning. All right, so let's draw those in. There they are. Okay, that's resistance. Then we have the low, okay, here, which was also a nice buying tail, a quick rejection right off this level, which also coincided with the previous rejection this day. This day tried, couldn't. This day came down, broke through it, but quickly rejected it back. So that's also another key reference area short term now, right? Okay, so now I've drawn those in. And one little side comment is that when you're doing this for yourself, it's helpful to use different colors or different tags to label different things. Right now, I'm just putting them all in just to show you how it's done. But it's helpful for you to use anything that makes things clearer for you. So if you want to use a different color, for instance, to represent the bigger picture key reference areas, and then a different one to represent the shorter term ones, because the bigger picture ones are more important. They do have more weight, so it would make sense to give them their own color or their own tag or whatever it is that you want to do. So experiment with that. Do whatever makes it clear for you. Right now I'm just drawing them out. Now, another side note is that personally in my own trading, right, this was, remember, if you remember the 1406, 1407, this was the top of the important key reference area, the big picture one. But right now, when we're heading into today, like the next day, this isn't really going to provide support and resistance per se in and of itself. It's already been traded through. This was just drawn in to give us a general, to help us remember that this is a whole important area. But we can keep that in mind, right? We can remember that 1397 to 1407 is important because of the bigger picture. But for all practical purposes, right here, 1406, 1407 is no longer going to be an important support zone in and of itself for the coming days. We're moving around it, right? So for all intents and purposes, we can actually delete these two lines, right, in terms of what's actually going to provide support. We know already this whole area is providing support on the bigger picture. But on the specific day, only the bottom of it is going to be meaningful because the rest of it is just moving around it. You get what I mean? It's just important on a bigger picture just to be aware of it, which is why I drew it in. But if I was actually trading this day now, which I'm showing you how to do, I'd take this out. So I would delete this line and I would delete this line, right? And I would just keep in mind that this whole area from 1397 up to 1407 or so is important on the bigger picture, right? This whole area is important. But right now what matters is the bottom of this area and the top of this area only. In the middle, as we're day trading, it's not going to provide support or resistance, okay? It's just going to be moving sideways. But it's still important to remember it. Okay, so now what else can we look at? Well, the last point of data that is going to serve as a specific support or resistance level going to the next day is always the close of the last day that we see. So where did the last day close? Right? It's always important to see where the previous day closed, in this case at 1407.5, and to put that, especially when you have a decent sized gap, like if we gap down the next day or we gapped up, this is going to become an important reference area. If we open right around it, not so much, but the further away we open from it, the more it'll become a line in the sand from the previous day's trading. So that'll be good to know. So you would draw a line right there too. And this line we've drawn in as just a black color for now. Alright, so now that we've done all this, we have to look at what's happening in the Globex or the overnight session, okay, as we get ready to open up on this particular day that we're about to trade. Now to do that, we'll obviously have to change this chart, which is right now, it's called a day time frame chart, right? You're looking only at the session that opens with the New York Stock Exchange at 9:30 Eastern and closes at 4:15 p.m. This is for the S&P futures, right? Every market is going to have its own different day session, all right? For instance, gold will open up over an hour before the S&P. So you just have to know the different sessions to know the correct chart to show for your market. But when you want to go to a 24-hour chart, that's the same for all markets. So now what we want to do is we want to go to a 24-hour chart to see right before the open, okay, what is the market doing. So let's go ahead and do that now. Okay, we've now switched to a 24-hour session, which means that it's continuous trading. There's no gaps or anything like that. This tiny gap that you see here is because of the weekend. And when trading resumed on Sunday evening, there was a slight gap down, but in general it's going to be continuous. And so now we're looking at this about a couple hours before the open, all right? And what have we seen? Well, this is yesterday. Okay, this current day is yesterday. And this is the stuff that's happened after the close, over the weekend on Sunday night until Monday early morning hours, all right? So this is live now. And we see that the market has come down from where it closed at 1407.75. It's come down all the way to this key reference area zone to 1399. So we're actually testing that in the overnight session before the market opens. And so as long as things don't change for the next couple of hours, it seems we're going to be opening up with a pretty decent sized gap down, about 8 points down, right into a support zone. All right. So anyway, what's important for you to do when you're looking at the overnight session is to mark where the overnight high and the overnight low occur. Okay, first of all. Now, why are these important? Well, you have to realize what the overnight session means, right? What's considered overnight in our session, and if you're looking in the US and you're trading the S&P or those markets, US based, All right, what's considered overnight is the Asia and Europe trading. So this represents basically what's been happening in Asia and Europe. The markets never sleep and they're all interrelated. Okay? Just because you're trading an instrument that trades on the Chicago Mercantile Exchange or even the New York Stock Exchange or whatever, it doesn't mean that it's not affected by the rest of the world and the rest of the world's exchanges and instruments. Especially these days, Europe has some very market moving news on a regular basis. And so this shows you how the market has been acting during, the Asian and the European session. And so just marking the high and low of the overnight session gives you some, for the particular day you're about to trade, some good reference areas. Now, these obviously are not going to be nowhere near as important as a major key reference area like this or like these other ones, but especially for the first couple of hours of the new day you're about to trade, they'll come into play. And you'll notice that when you go to test the overnight high or the overnight low, a lot of times you'll see a reaction right from there. All right, so they do matter for the current day you're trading. And that's why we do this trade plan, half an hour or so before the market opens, before we're about to trade, because we want the latest information of what's been happening. All right. And so now there's, a couple hours left, but just for the purpose of showing you how to do this, we're going to assume that the market's about to open in 20 minutes. And if this were the case, right, where would we put our overnight high or low? Well, this would be our overnight high. You see, I've labeled it overnight high right here, right? And this would be our overnight low. And I've also labeled it overnight low. So now we have these two reference areas once the day opens to see, are we staying within the range of where Europe and Asia traded, or are the buyers or sellers moving us out of that range, right, and seeking new areas of value? So it's just a good reference. Now, having labeled these, let's go back to a day time frame chart. All right, so here we are back at a day time frame chart, and as you see, now these are drawn in. Here's the overnight high and here's the overnight low. All right, and we know that the S&P is trading at the lows right here. You see this black thing says 13.99. That's where it's trading right now. Right? So given that, what other key reference areas are going to be important? Well, everything we've been looking at so far has pretty much been on the vertical scale, of these extremes, except for the couple high volume nodes, one represented here and one represented up above, that are basically volume on the horizontal scale. But on the shortest time frames, it's always been just about price on the vertical scale. So let's bring in that last element of the horizontal scale and see how to look at it. So we know that these 4 days are a pretty decent sized balance area in this time frame. So let's draw in the profile and see where the high volume node is. All right. Okay, I've drawn it in now. And we see that the high volume node's like right here to here. So roughly around 0675 up to 1411. So it's about a 4-point range or so that represents the high volume area. Now here's how this works. We're right now below it, right? We're at 13.99 in the overnight session. And if we were to open up here, this is going to become important resistance because we're below it and we're going to be going back towards it, right? But assume this action didn't happen in the overnight session when we were still somewhere here, like in 1407 or so. Well, since if that were the case and we were still trading within this range, it wouldn't be resistance or support in and of itself because we're still within it. We haven't moved away from it to then retest it. All right? It would, in that case, it would simply be a reference that tells us what the market is likely to do if we move above it or below it. So if we were to open up at 1407, for instance, let's assume we're not gapping down. All right? This high volume node would not be something that we would say, oh, I want to buy here, I want to sell here, in and of itself as a support or resistance area. It would just simply be a reference that we're watching. We're saying, okay, can price trade above it? Can price trade below it? And it would be helping us gauge who's in control. If above it, the buyers are in control. If below it, the sellers are in control. So it would be acting as a line in the sand. But now, the market's already below it. All right, we've already, in the overnight session, traded all the way here. So it already tells us the sellers are in control. All right, it's already given us information. It just happened to happen before the market opened. So the way we would use it now is now it actually becomes an important resistance area. Okay, because we're below it, and if we were to test it back towards it from underneath, it's going to be resistance. And we discussed this extensively in numerous examples, drills, and so forth in the previous training, which if you don't remember the reasons why, you should go back to that and review it. All right, so in this instance we would be putting resistance here. Now it's a wide zone, it's about a 4-point zone. So for day trading purposes, yeah, the whole zone's important, but for instance, you look for confluence, right? So since the yesterday's close is already an important level at 1407.75, which we've highlighted here with the black line, and the bottom of this, the high volume part, is close to that, that would be a good area to draw in resistance. So let's do that. Okay, so now we've drawn it in. But what's also there? The overnight high. Now we have really good confluence. If we open here and we rise up back into here, we have the beginning of this high volume area that's about to start giving resistance. We'll have the overnight high and we'll have the gap. Good place to sell. We'll get into the tactics and the actual setups, but it's going to be an important area right here when it tests that. Okay, as it goes here, and if it goes through, this whole area is going to give it trouble because it's a pretty thick area. But then when it reaches the top of it, it'll have that one last stand of resistance, for instance. But the top of it is also close to these resistance zones right here, you know, from yesterday's high and the morning rejection. So we would draw another line right around there to show a bigger zone. So there it is now, somewhere like that. All right. And now we have a clearer picture of the important stuff for the current day. Yes, it seems like there's so many lines here, but really it's not as complicated as it looks, because we know all these 4 green lines are the confluence of all the major key reference areas. All these red lines up there, this is the bigger picture balance area. This is these 4 days is balance area highs, right? This is yesterday's high. This is the high volume node top. This is the high volume node bottom, the close, and the overnight high. So there are only a few things, but they give you zones. This is a zone, this is a zone, this is a zone, another zone, you see? And these are going to provide, well, how you'll see later, good trade location areas, and always constant feedback and information about who's in control of the market and what the market's likely to do going forward. And there's one last thing I need to mention. Let me get rid of this big profile, right? We drew in the big profile because there was 4 days sideways. But what if there wasn't? You know, what's important also is to look at the last day's reference area or anything around there. All right. So for instance, let me show you something. Let me draw in the profile of this last day. Okay. So I've drawn in the profile of the last day, and as you see, the high volume node of the last day is yet again another confluence. It's happening right here in this zone. So that's really good, right? But, you know, assuming there wasn't this 4-day period and you were looking at, well, other important key reference areas would be the high volume nodes of the previous days on their own. Okay, let me give you an example because this one doesn't actually show it well. Let me go back into the chart and give you an example from a previous period. All right. Okay, I've went to another part of the chart just to show you how you would be doing it. Let's assume, you know, this is the history and you're about to trade a new day starting here. Okay. Now you see there's no sideways balance. So what would you be doing? Of course, you'd be doing the same stuff. For instance, you'd be highlighting this gap and the major highs, major lows, and other big picture stuff. But when I'm talking about the profile, what you would do is you would draw in the profile of this last day, the day previous to the one you're about to trade. Okay, so let's do that. All right, so that's drawn in. We see it was pretty narrow range day. So you're going to have volume scrunched up here. All right. But then you would also, I mean, you don't know where this next day it could, go down, it could go up. So this day is relevant too, right? So you would want to draw in the important key reference here for this day in terms of the horizontal scale. Of course, the vertical scale, like this high, is very important, but I'm talking on the horizontal scale for now. So here's what you would do. You would look, you would say, okay, where was there sideways, horizontal volume development? Well, it's pretty obvious there was one right here. This was a sideways movement. Here was pretty vertical, so there's not really going to be much sideways volume. So here. So, and what about this day? Well, this day's irrelevant now. But why? Because yes, there was a lot of volume sideways, but we traded above it and below it. So it's irrelevant. We've already went through it on one side and to the other side. And like we've discussed before, that makes it irrelevant. So the only two relevant days right now are this and this. And these would be the important areas to highlight. Okay? And so let's see, what happened on the day. Where did this next day open and which areas came into play? Okay, so this is actually pretty cool to look at. Right, you might not notice it, but let's actually see what actually happened here. All right, let's go in, let's zoom in a bit and check this out. Okay, so now I've just zoomed it into a 2-minute chart. Let's actually look at what happened. So you had highlighted this day, right? And you had also highlighted, this day before it. But as it would happen, this day never came into relevance because the market traded down. So let's see what actually happened in the morning and how this helped you. Well, before this drop, what happened? The market opened here, dropped down instantly, about 2.5, 3 points, towards the lows. It held the lows. What did it do? It came back. Now that it's below this high volume node, the sellers had taken control and taken it below yesterday's value area, right? Now the buyers came in holding the lows and tried to buy it up. They bought it up right into the big volume part right here, right into the middle of it. The green area volume bar shows the highest horizontal volume of the day. And as they bought it right into that, what happened? It failed. It got quickly rejected down, right? And so that not only told us that, the sellers were in control, but it in itself provided a good resistance area. And what ended up happening? They tried to come back up, failed again, tried to come back up, failed again. So this area was holding really well. And then look, just got killed. All right? Now, of course, to know that there was a good potential for this, you would have to have analyzed it and had a whole bigger picture context. But it just shows you why it's important to watch these areas. If you hadn't had this highlighted, what would this have been? It looks just like a random place. Like, what is 1450? It's nothing here. But when you have this highlighted, you see why it's important. Okay? So that's what you do. Other than all the other stuff we did, the highs and the lows and all that, you take a look at the previous 2 or 3 days before, and you put in the major high volume nodes, and those will be key reference areas for you in the current day. All right, so let's go back now to our day that we're trading. Okay, and as we see for us, because all the days were scrunched up, we grouped them into one major profile, right? Instead of just looking at each one on its own, they were all one big balance area, and that's why this provided the good key reference. So now we have all the information we need in terms of support, resistance, key reference. It's taking quite a while. We put everything together, starting with the big picture stuff. The good thing is that you don't have to redo the big picture stuff every day because it won't change that often, right? And then this small picture stuff, like the previous high volume nodes, the previous high and low of the day, all these things will be important. So we'll see going forward how to analyze this, which will come into play with the tactics. After the market is opened, you'll see. But before that, you'll also have to draw in scenarios, right? And you're going to be doing, okay, what would happen? What would mean if this thing broke? What would happen and what would it mean if, we went up? And that's what we're going to do when we finally put all this together and draw scenarios. All right, but for now, you have all of your key reference areas drawn in, highlighted, and you know what's important. The process, though, is what's important. And this is what you should be doing every day, right? Every day before the market opens, you need to go in, check the whole, context, everything, and then draw in all these areas. Okay, so you'll be prepared. Yes, it takes a bit of work, but that's what preparation is all about. And once you do it, you'll be much better able to take advantage of the market moves that are going to show themselves. Okay, so in the next sessions, we're going to carry on with the rest of the steps.